should you flip properties in your own name? And what are the tax implications of doing so? And wait a minute, what about mortgages? Check out this video as we discuss that very subject. You are buying a property, you're disposing it. If you're doing this more than once or twice, you are going to be a tradesperson. Not only have you got income tax issues, but you could have CDM. If you don't know what CDM, do check it out. You'll also have a variety of CIS issues that you'll be, because you are now a developer and you must be deducting CIS 20% tax on your subcontractors. So if you're not, you will be footing the bill for that. So there's a lot of things that you're doing, John, that I would say get some good advice, because I'm seeing a couple of things and I've got to be honest with you, I'm not comfortable with it. So do get some advice on it. The fact that you're doing it one or two on the side, HMRC don't care about that. How will they find out? Well, it's against your name. They only have to look at land registry and say, well, what's the trigger point? Oh, it's been done in 1-2 years. Oh, they've done that once or twice. It's not going to be too difficult for them to find out, well, actually, that's a flip. Let's charge you tax. From that perspective, Simon, if someone's doing, and this is another thing that I've seen people do, is that they use buy-to-let mortgages when they're doing property developments. Give us your views on that.
And we've already started to talk about this, haven't we, Simon?
We kind of briefly covered that one earlier. Yeah, you've got to take out a development loan, a refurbishment loan, or a bridging loan, not a buy-to-let mortgage. Your buy-to-let, yeah, the clue is in the term buy-to-let. You're buying it to let out, despite what condition it's in. And if you don't, you have effectively lied on your mortgage application. It's more serious for the broker than it is the applicant, actually, to be fair.
Well, the thing about that, though, Simon, was the rates, because on the Property Expert Panel, which is another very famous show, that is the first Monday of every month, which you and I are on, of course. But the actual, you mentioned about the bridge finance interest rate was way below what I used to think. It was 1.5% per month, but way lower now, yes?
Yeah, so for 75% loan to value, I've got a rate of 0.69 a month. If you take that down, I think it's 55 or 60% loan to value, it comes down to 0.49 a month, which is less than 6%. Now, it's not as cheap as a buy-to-let, I get that, but it's not far off it. So the reason for doing it kind of disappears as well and evaporates.
Of course, we're talking about someone that is doing, like John. He might be thinking about doing a flip, but then decides to hold it, or it's not in a mortgageable state when he first buys it. Your take on that is that you should do a bridge finance and then work with a broker like yourself to move very quickly from a bridge finance into a buy-to-let product.
Yeah, absolutely. Yeah. So there are enough lenders, a few lenders out there that will do a bridge to term product. So if you're looking to keep it, so it minimises that time while you're stuck on the bridge. You go straight into their term product. You've only got one set of legals to do. The valuer only has to come back and do a revisit rather than a full valuation. So there are ways of mitigating those extra costs as well, for sure.
Hopefully you found that video to be of some use, but don't stop there. There is plenty of content that I think you should be watching, and here is the video that you should watch right now.